Hey, welcome everybody. Another episode of our Facebook Live where we bring in many different content. And today I'm here joined again with my buddy and partner, Tom Bibby Varghese. Today we have something really exciting that we want to share with you, and it's called our vision. And before we dive into that, I'll let Tom speak on that part. I just wanted to give a big shout out to all our new members for joining in. Thank you, and make sure that you do have any other friends or family that are in the dental or medical field and want to learn about real estate, bring them on into this group. So without further ado, I'm Dr. Noah Liu, and I'm going to pass the mic off to Tom. And Tom, it's all yours, man. Tell
Yeah,
exactly
absolutely.
what are we talking about tonight.
Yeah, thank you, Noel. Good afternoon, everybody. Once again, and excited about this Facebook Live where we are going to share something super important that we have never shared before, actually. My name, by the way, is Tom Piporgis. We are the admins of this group along with Dr. Noel Lowe. And my background is in entrepreneurship. I'm a serial entrepreneur, running businesses as well as at the same time acquiring properties. Acquired several properties along with partners, and that's why we are here to not only acquire business, acquire properties, but also teach you guys how you can do that as well. Or if you want to join us, that's great. But so today what we're going to talk about is our vision. So we are seeing a lot of opportunities come in the real estate market these days because of how the market is right now.
Hmm.
Everybody's going after shiny objects, and because the interest rate is pretty high now, so there is not much activity happening in the real estate sector, right? So people look for other shiny objects like crypto stocks and all these things, which means there is a great opportunity of some overlooked assets that if we are smart enough to accumulate it during those times, within a few years, you can flip these assets or hold it for the long term and make a lot of money. So that's what we're going to talk about, how we can partner and we all can make a lot of money. So today, Dr. Noah Liu and myself, we want to talk to you about our vision. Our vision, first of all, we want to educate you guys on how to do real estate and how real estate should be one of the wealth accumulating strategies. And it should be a major part of your wealth accumulation strategy simply because it is it is real. It is not going anywhere. It's not a
Hmm.
piece of paper. It is a real asset with real tenants, real leases, and money keeps coming in, and it's something that creates generational wealth, right? So
Hmm.
our vision is to build something like that'll build generational wealth for anybody who is involved. So here's our vision. This is just a 30,000 foot view. We are just ironing out the details. We own several properties already. And Dr. Noel and myself, along with a couple of our partners, we own several properties, and those are in different parts of the country. It could be in Florida, Georgia, Alabama, Texas, right? So now our vision right now is about owning $10 million worth of
Hmm.
beautiful, solid cash flowing assets. And we want to partner with you guys and how we can do that journey together, build up a portfolio of $10 million. It is not just one asset, it could be multiple industrial assets. Industrial is very hot right now. It's kind of overlooked, and it's really bringing to the mainstream. A lot of private equity firms are getting involved, and so whoever is able to build up that portfolio, they're going to win big. So our plan right now is to snag some opportunities in these real estate in the industrial sector, buy some properties, hold it for some time. When the interest rate comes down, these properties are just going to skyrocket in value, and we are only buying in great areas. So $10 million, very easily attainable goal.
Hmm.
And whoever is involved, we don't know. This 10 million might be worth 30 million in 5 years, because that's the way it's going to go once the interest rate comes down. Especially with an administration that's pro real estate, pro depreciation, everything is happening in our favor. So this is the right time to get in, and that's why Dr. Noel and myself, we said, hey, we got to do something about it, and we got to capitalize on this opportunity.
100%. So many of you guys have asked that how do we get started with something like this, because many of our colleagues, they are not really experienced with real estate, and what's happening is trying to take down these 2 3 4 million dollar deals is like astronomical at this point
Mm.
for many of us. And what we talked about is how do we buddy up, gather up, and we take this down with being like joint venture partners, right? And this is something which I strongly believe that if the interest rates are high today and we are buying them at a great deal and it's cash flowing, very, very high chances of those interest rates going down in the next few years, because it just can't keep going up and up and up forever. We've already seen like half point come down, and probably is going to see another half come down in Q1. So what Tom and I we are planning to do is we are planning to take this asset class, flex industrial, take it, which is going to be like $10 million worth. It could be one property, it could be two, it could be three, it could be four. So it all depends on how we divvy it up. But the key is, if you guys are looking to learn real estate, if you guys are looking to take down bigger asset without having to endure all the risk,
Mm.
we, meaning like Tom and I, we will be coming up with our own cash, and we'll be putting down on those escrow deposits, taking this real estate down with your help, and then we can all win together. Right, Tom?
Absolutely. Yeah, absolutely. And then our team will do all the groundwork that is needed, all the maintenance, putting the EMD down, just like Noel was saying, and anything that's needed to run the property at the same time, keeping you updated through our team who will keep sending you updates on a monthly basis on what's going on with the property and how it's cash flowing. And we are only looking at properties in great areas that is going to appreciate in value. And our job, so this is the key, right? So can we buy this ourselves? We certainly can. We don't need to partner with a lot of people, but then we will only be able to buy smaller assets and
Mm-hmm.
hold for some time, make some money, right? But we want to look at the bigger picture. We want to build a portfolio of assets. See, if we were to buy a building that was like, let's say, $3 million, it's got 7% or 6% cash flow coming in, we can probably sell it in 5 years for maybe 3.5, 4 million bucks. Okay, maybe even 4.5. But when we have a portfolio of $10 million, now you're getting bigger people like private equity and venture capitalists who are looking at this, looking at those kind of assets. When we go with like $2, $3 million, we don't get them to look at us. Like when you say, okay, we've got a portfolio of $10 million worth of solid industrial flex properties, we will start bigger people looking at it, which means they will pay bigger dollars because all they're looking for is a monthly cash flow. They got big clients who just want a check every month, and they're looking to these kind of assets to park the money
Mm-hmm.
so that we can grow. And then when they buy, they're buying for 6x cash flow and things like that, 7x, because they are big, their pockets are big, they got a lot of money, they want to place it somewhere. And that's why we want to partner and build up this portfolio into something big, and then sell it or hold it for the long term.
And then $10 million, honestly, guys, it's more like it's a starting point,
Yeah.
because for these private equity to even look at something, it's got to be in the 5 digit and up, right? I
Yeah.
mean, it's not. I'm sorry, what am I saying? Not 5 digits, 7 digits and up,
Yeah.
right? Seven, eight, 9 digits,
Eight,
right?
eight,
That's
eight,
what they
eight.
like.
Yeah.
Right, right. So what we're trying to say is Tom is being really, really conservative and trying to be like, okay, let's start with 10 million. Let's make it small. Let's make it sizable. Because for us, many of our colleagues, we are we are dealing with single family homes, right? We are dealing with duplexes or quadplexes. Now, when we talk about like assets in like the 15, 20, $30 million range, it's like a lot of people they can't even like comprehend that number. Like how are we going to take something down like that? So the best way for us to start tackling it is starting in small bit size pieces. And the best way to do it is we have like two deals currently we are looking at like really closely. So that is something which I'm going to share a little bit about one of the deals. The other one we showed you last time when
Yeah.
we did a live. So we were kind of looking at that as a prospect, but nothing has caught traction on that one. But this one here looks pretty good. So let me do a quick screen share, Tom, and then you can probably talk about this place because this is in Texas, very close to where Tom lives.
Yeah.
So
Yep.
let me do a quick screen share. All right. Can you see this, the whole thing?
Yes.
All right, Tom, you want to talk a little bit about this here?
So this is what's called as a industrial flex property, right? So the way Noel
So
and I
right
we
here,
go,
right?
yeah, what's that?
Just
Yeah,
my
those three,
mouse, right? My
three
mouse. Yeah.
three structures, right?
One.
This is an industrial flex property. So if you're listening to us for the first time, let me educate you on what industrial flex is in just 1 minute, right? Noel and I, we got into this because we own a property in Georgia that's called industrial flex, and this has been a cash cow since the day we got it, right? And the property has appreciated over 50% of what we paid for in just 2 years. So it's nothing but a place where contractors, plumbers, basically small business operators, they want a
Mm-hmm.
place to store their stuff and operate their business out of it. It could be an HVAC guy, it could be a plumber, it could be maybe sometimes some auto detailing guy. They want a place where they can run the business, not in their home garage or their truck, but they want to put the stuff in. So their business has grown, and they're looking to pay 1,500, $2,000 a month for a space like this. And now the property that you're looking at is brand new, 100% occupied, beautiful, beautiful build, and the location is phenomenal, guys. Usually industrial flex properties never end up in these kind of locations. This property is in a location that's surrounded with explosive growth, and these established coffee houses, restaurants, all those are close by. Starbucks is probably a mile away from this.
Mm-hmm.
Anytime there's a Starbucks around where you purchase property, that location is great. So this is one of a kind location, 100% occupancy, brand new asset, and this is something industrial. This is something bigger. Venture capitalists, private equity, those kind of people will be interested in these kind of bills. So this is just one of them. It's right around 7 cap, I believe, and we're looking at it. We're probably going to put it under contract pretty soon. This is just one of them again, but there are several like this, and our goal is to build up a portfolio. And just like what we did in Georgia, if you're able to pull it off in 2 3 years, we can probably increase the price of the property by, let's say, conservatively, like 30%. Okay, on a 10 million, 30% is $3 million. That means we're making a $3 million profit along with monthly cash flow that's coming in every single month.
Mm-hmm. And that's one of those things where Tom and I, we were into multifamily, and that is one area, asset class that we kind of moved away from into flex industrial. One of the reasons flex industrial is so hot is because it's occupied by blue collar workers. These guys are basically general contractors. They are electricians, plumbers, HVAC people. They are legitimate small business, like the typical small business in the United States. So these guys, we have less of a problem with evictions. We have less of a problem with delayed rents. So many of these guys, they will definitely keep their businesses afloat because these are the trades guys that will actually rent the space and operate from. And their job is in high demand at the moment. So if you look at it this way, this is one of those areas where I would say it's pretty secure in a sense that it's not where somebody's staying in there and we are waiting for eviction where they're not paying their rent and the government is going to keep them because they need a housing or affordable housing or some sort of a living quarter. This is something which these guys operate from. They are making money, they're making cash flow, is their businesses. So chances of them defaulting very low compared to multifamily. Right, Tom?
Right. The That's a great point that you said about multifamily. Now, here's the thing with multifamily. It's still great. We're not saying it's bad at all. But what we have realized is what's going on in multifamily right now. Everybody and their mother is looking at multifamily. Every
Everybody's
course,
looking.
every course you go to, everybody's teaching how to buy multifamily. And what happens is that when that happens, they bid up prices, right? They go and say, okay, the one group is coming, and then the other group just got the training, and they want to buy this. Then the other group came from another guru, and everybody is coming to buy the same property. And as a result, they bid the price up, and they're not even looking at the financials. And within like 2 years they will hit some walls in trouble, and we see many properties right now in trouble. They can't make the payments because the interest rate has gone up, property tax went up, insurance went up, because they bought these properties at a higher valuation, because there was a bunch of people waiting in line to get it. Now, when it comes to industrial, there is still demand, but maybe like a tenth of what you see in multifamily, and that is right now. But we believe in 5 years that's all going to change, because there is so much cash flow coming into these industrial flex properties. There is so much demand. Like one of the industrial properties that we were looking at, we don't even have to advertise to get tenants, meaning like we don't have to list it in any listing. All they did was just write the phone number on a wall, and they just told me that they just paint sprayed that phone number, and within 2 weeks the property was occupied. That's the demand that these properties are seeing. It's many cases you don't even need a realtor to get people to come in and rent these places, because of the demand, because there's not that many being built. But in 5 years that may change, because all these guys will start teaching that, and you
Right.
never know, this may be the next hardest thing. So it's better to get in right now and catch that trend early, is what we are saying.
Because what happened with multifamily and back in all the real estate back like about 2.5 years ago was everybody bought them at a very low interest rate, right? When
Hmm.
you buy something at a very low interest rate, what's happening is it's gonna, of course, the interest is gonna jump up like a spring, and that's exactly what happened. That's where the cash flow went tight. Tom and I, we are in a few limited partner deals with multifamily, and in full disclosure, they're not doing well, right,
Yeah.
Tom? They
Yeah,
are not
absolutely.
doing well, and one of the reasons is like Tom just mentioned, that is because the property taxes went up, the insurances went up, and of course the principal and interest went up because the interest rate just jumped up. So what
Yeah.
happened was a lot of these guys talk. Tom, I want to talk a little bit about the bridge loan, right? So these guys got a bridge loan for like 3 years, and they had a cap. They had the interest rate capped for
Do you
three
want to do you
years.
want to explain to some of the listeners what a bridge loan is?
So bridge loan is like a small, like a temporary loan. So a temporary loan meaning like, I wouldn't even should not use the word temporary, but something to kind of help them get the operations in line so that they can refi and they can start getting cash flow out back to the investors. So a bridge loan is something like, let's say we close on a property, we get that loan, and we secure a loan for whatever LTV can be, right? But we get it at a very, very good interest rate. However, that interest rate will be fluctuating after 3 years. It depends like what's going to happen after 3 years. So a bridge loan is typically 3 years, and there's an extension to extend in 1 year and then 1 year more. So maximum of 5 years based on the current interest rate after 3 years. So what happened was a lot of these multifamily operators, they got into the deal at, let's say, 3% or 3.25% in the low threes. They got in. By the time they were trying to get the whole operation stabilized, insurances went up, taxes went up, and what happened was inflation that caused a lot of people to start looking at other affordable housing where the occupancy went down. When the occupancy went down, they were not able to stabilize the property. 3 years was up, the interest rate went up, and now they are forced to buy rate caps. And now, when they started buying those rate caps for a, let's say, a $2 million deal, we're probably looking at least a few $100,000 just to kind of keep the rate down. So that
Hmm.
started impinging on the cash flow and the profitability of the whole deal, and that really caused many of these properties and deals to be under distress. With this property here, it's at a higher interest. And the good part is, if we get it at a good cash flow where there's a good balance, where the PNI is going to make sense, where we spoke about the DSCR, which is the debt service coverage ratio, like after all the expenses are paid, whatever's left over, we can still manage to pay the bill to the bank. And we still have about 30% left over. That's a good deal. Because what's going to happen, like Tom said, in a few years or maybe even next year, the rates go down, we refi, and everybody gets the money back. And it's a much more stabilized real estate asset compared to multifamily.
Mm, absolutely. Yeah, that's our whole game plan, right? This is the time to buy because when interest rates are high, property prices drop. And that's when you can get some properties for really good prices. And we are trying to get some institution class assets so at some point we can exit for a big multiple, and that's the whole game plan. And although we said it's $10 million, we are going to partner, and when we pool all our money together and come together, we are able to buy these kind of assets. And that's the whole game plan, and we'll enjoy the cash flow and a much bigger exit, and everybody will be happy.
Exactly. Like Tom and I said, we can take down the property, but eventually, I don't care how big someone is, eventually the capital runs out because everything gets tied inside the real estate deal. With
Yeah,
this kind of a mindset, we can actually go buy a more deals and everybody wins. Right now, it all depends on. Now, a lot of you guys are kind of like concerned about control. Tom, let's talk a little bit about control, like a couple of minutes. Like,
sure.
somebody go like, hey, you know what? If I give my money away, what's gonna happen? I don't have any control over it. Those are the kind of concerns, and that's a concern that I had genuinely, honestly, when we started. Right?
Okay. Yeah. Yeah. I mean, so it depends, right? If you want a lot of control, you need to own it yourself, right? But then you're stuck with the day-to-day
Right.
management of the asset. You'll be managing the rent collection, people moving in and out. You got to find a new tenant. If something goes wrong with the property, the roof is leaking, you got to fix it. HVAC goes bad, you got to take care of it. I mean, there is when you add up all that time involved, really, is it worth it owning the property, or is it better to focus that time on your profession, like for example a dentist who can make a lot more money hourly basis rather than spend that money chasing a tenant for the rent, which is a $15 an hour job, right? So that's where you got to see, this is a play where you are owning assets. You're a part owner in it. I mean, we have a team that'll manage it, run the show. It means it's almost there's nothing 100% passive, but this is almost 100% passive. Where I mean, but if you are,
Exactly.
yeah.
Exactly.
But if there is somebody saying, "Hey, I want to invest big," and I understand at that point you will want some control. I mean, that's something we can definitely talk about, right?
100%.
Right, Noel?
100%. So it all depends on what you're looking for and how do you want to make your money work for you. So Tom and I, we've launched a fund, and I invite everybody to come and check us out. Like he said, this is still like in a visionary period. We have a starting point at 10 million, and 10 million could be multiple assets or it could be one asset. But right now, the one that we showed just now, it's one of them. So something along those lines where we are going to be looking into more asset classes, not asset classes, but more asset flex industrial assets. And this is going to be one of them. So as you saw, this listing was on Crexy, but it took it down. So I'm not sure exactly what's going on, but Tom is going to get more details once we find more out. And if you are interested, definitely DM us.
Yeah.
Just kind of like call us up. Some of you guys have our numbers. Make sure just contact and we can get you more details, and we can even share exactly what's going to happen with this deal and what's going to be the return and all the numbers. So,
Yeah.
yeah, Tom, any last minute thing? With that being said, I think we should land the plane for the night, right?
Yeah, exactly, guys. So Noel summed it up. So we launched the fund, and we are looking for people who are interested in acquiring institutional class assets,
Mhm.
coming alongside for the ride, making some cash flow, and at some point we will be able to exit for a higher multiple. And initially, I know a lot of people will be reaching out. So if you have any questions, just leave a comment or just DM us. But if you're interested, don't wait on the sidelines. Just reach out ASAP, guys.
Right. Right. And we're not going to play the game like, there's only so many spots left and, whatever. We are like pretty much an open, transparent book.
Yeah.
You are interested, come on in. It's an opportunity. We're not here to convince, we're not here to sell. So if you want to be part of this deal, let us know, and we'll definitely get you more information. So, with that being said, ladies and gentlemen, thank you for watching, and let's be in touch. And until then, we'll see you back next week.
Thank you guys. Have a good
All
night.
right.